need to consider some new financial instruments and new policies such as green bonds, green banks, carbon market instruments, fiscal policy, the green central banking, fintech, community-based green funds, etc., all which are called green finance. So the session here with our honorable speakers unpacks the green finance for wind. I invite our distinguished panelists of this session, Mr. K. Mukundan, the Strategic Initiatives and Policy Advisor with the National Investment and Infrastructure Fund, Ms. Nina Fenton, the Head of Regional Representation, South Asia, European Investment Bank, Mr. Rajiv Mishra, Managing Director of Apraava Energy, and Mr. Shyam Sharma, the CFO, O2 Power. The session being moderated, I invite our moderator, Mr. Amit Kumar Singh, Director, Clean Power Program, Shakti Sustainable Energy Foundation. Over to you.
So, good afternoon, everyone. It's my privilege to moderate this session on the last session on green financing. It's the last one, but I feel it's an important one. And the reason I'm saying this is an important one is because we had discussions on policies to accelerate deployment of wind energy in India. We had discussions on strategies to deploy offshore wind energy in India. Then we had discussions on how can we basically pave the way forward for supply chain management. But if all of this has to be realized on ground, then, and when I say on ground in terms of actual deployment, then we need money. And that's where financing becomes very, very important. There have been studies which try to estimate the quantum of investment which is required to meet our 2030 target, or we can talk about the net zero target. And I'm not going to get into specific numbers per se, but one thing is very clear. The amount of investment which is required to meet our 2030 target, that is much more. And when I say much more, I'm talking about 3 to 4 times than what we are having today, which means we need to accelerate financing, that's for sure. Then the good thing is that green financing in India, it is gaining momentum. And India is one of the leading energy market. International investment community, they are looking for green investment opportunities, green financing opportunities. Even our local ecosystem in terms of the government or companies or banks or whatever you want to call it, venture capitalists, there have been an increased interest about this green financing. So the overall thought process is we have got increased momentum for green financing. Recently, few of the banks have also kind of launched green bonds. SEBI has come up with regulations around these green bonds. So I would say this is a good start, but there is a lot to be done. And this is exactly what we are going to discuss today in our session. With the, I would say, extremely rich experience with our team, with our panel members. And I think probably I'm the least knowledgeable in the area of green financing, but fortunately the good thing is I have been given the responsibility to ask questions, so that makes my job easier. So that's what we are trying to achieve. And what I'll do is, we'll start with Mr. Mukundan. And my specific questions to you will be, if you can talk about some of the new avenues for green financing in India, basically to mobilize domestic capital, that would be great. And then we will take it from there.
Hi, Amit. Thanks, MNRE, for having me in this session. It's a pleasure to be in the midst of all this August gathering. If you see the last couple of years, we have been adding about 12 gigawatts of renewable energy in this country. And most of the projects, what has been the history of India is that all bankable good projects, there has not been suffered because of non-availability of finance. Be it equity capital or be it debt capital, the Indian banks, State Bank of India, and there are other specialized institutions as well, they have been getting finance for most of the projects which have been awarded in the last couple of years. In fact, we at NIF also, we have a debt platform. We have provided about 30,000 crores of debt. We have a dedicated equity platform where we have invested close to about $1 billion into renewable energy projects. But is this sufficient if we have to achieve this goal of 500 gigawatts which we have in front of us? That's the question which we have been adding about 12 gigawatts. Might be we'll have to add about 35, 40 gigawatts or more than that per year. This kind of an accelerated investment which has to happen in the next 7 years. I think there is a need for new avenues of finance which needs to be done, both internationally from people like multilaterals and others, and also from the domestic sources of capital. And one of the important sources of capital which we have globally has financed infrastructure is pension fund and provident funds. We see the Canadian pension funds coming and investing into India, basically because infrastructure is a sector where the projects have a life of 20 years or 25 years or 30 years. And that's what is the maturity profile which is required for a pension fund or a provident fund, because people are contributing today and these obligations come up after about say 20 years or so. And infrastructure investments also have consistent fixed kind of returns as well. If you see the Indian market, unfortunately, the biggest pension funds and the provident fund, which is the EPFO, today they are sitting on about $200 billion of equivalent of corpus, about 16 lakh crores. And if you see the new pension scheme, which was launched might be about 10-15 years back, they have a corpus of about 7,50,000 crores. Together, these are large pools of capital, which if you see today, 85% of it or 90% of it is invested into government securities. And during low interest rate regimes, they earn something like 6.5%, 7%. And EPFO really struggles to give a return of 8.5%, which is expected by all the subscribers. This is a dichotomy in our country where there are a lot of money, and the inflows into each of this scheme, whether it is the NPS scheme or the Provident Fund scheme, is huge every year. And the safest thing which they do is to put money into the government securities, state government securities or central government securities. Like what we have learned from the Australians, what we have learned from the Canadians, there is a need for investment by the pension funds and the new and the Provident Fund into infrastructure, bonds of project development companies. And the biggest fear in their minds is the loss of capital because of non-performing assets, and consequently their obligation towards the employees or the people who have contributed to these pension funds. Again, I go back to the history. I was checking up the statistics about NPA in the renewable energy sector, and more particularly wind, solar and all. At least in the last 5-6 years, most of the PPAs have been honored, and whatever has been well-structured projects, the NPA levels are at less than 0.5%. Therefore, the industry has also shown a lot of maturity. The default levels are very low. Therefore, there is a need, in my opinion, of these long-term domestic capital, which is basically the new pension scheme, EPFO, to come largely into this sector. Initially, to underwrite into a bond of renewable energy company might be challenging for them. They could come into InvITs and other products which are available, which are being managed by fund managers, and that would be a large pool of capital for the wind sector.
Thanks. Thanks for highlighting some of these avenues like pension fund and provident fund. So that's about the domestic capital, and as we need international finance also. The good part is, like, we have seen few of the success stories around the world. I mean, successful case studies around that, and EIB has been kind of instrumental in kind of deploying some of the projects, particularly wind energy projects. So I'll go to Ms. Nina Fenton, and it will be good if you can highlight some of the emerging trends in the area of green financing, and green financing in the context of RE project, and specifically if you can talk about wind energy or offshore wind, that would be great.
Thank you so much. And I've got my job cut out for me there, so I'll try to touch on some of those points. But Firstly, thank you to MNRE for having me here today. And I heard that, you know, the aim of today was to be celebratory, and I think that's exactly right, because EIB, we're the Bank of the European Union, and our strongest mandate today is really to focus on climate and climate finance. And one of the main reasons why we're so keen to partner with India is that we really see the ambition. We see India becoming a global leader on solar, but also on wind. And, you know, we're really happy that we've been able, in partnership with State Bank of India, IREDA, IIFCL, and others, to make a small contribution, I would say, but a contribution to that story already. So I wanted to recognize that, and I don't know, some of the partners may be here in the room, so well done. In terms of emerging trends, I think we see very clearly that people are going for green. There is, I would say, even in the last couple of years, we see a growing understanding that the opportunities are there, that this is the future, that this is not some kind of niche CSR thing. This is, you know, really where we want to put our money. We want to avoid stranded assets. We even see, you know, UAE and the Saudis starting to think very, very seriously about renewables. So this is very positive. And we also see an understanding, I think, that maybe wasn't there, that this needs to be investment in an energy mix. And I think that's where wind comes in, because I think a couple of years ago there was a strong focus on solar because, you know, of course, the cost has come down already. It's very cheap. And, you know, now I see more and more this understanding. I mean, it sounds stupid. A colleague from GIZ always says to me, look, you know, the wind also blows at night. So that's why it's really important. And I think now everyone recognizes that. And I think people understand, particularly India is very keen to develop the green hydrogen industry. And that's something that we're very keen to get behind, you know, if there are opportunities there. And I think wind, onshore and offshore will be really, really crucial for that, because you need that kind of constancy of power supply. So we see a lot of new investors coming into green, to looking at this very carefully. And we also see, you know, initiatives, for example, the NIF, you know, looking seriously at how to attract those. Going to wind specifically, I'm also not an expert, but I've spoken with my colleagues. As you say, EIB starting in the 2000s was really like a cornerstone investor in kind of starting and scaling up offshore wind particularly, but also onshore in Europe, starting, I think, in the Scandinavian countries in Denmark. So a few of the lessons there. I would say the first thing that's needed really is vision, right? So one of the gentlemen on the panel earlier said the words, unless we start making it, we can't make it. Someone has to take the first step. There is always a risk there, or at least a risk perception. Someone has to jump. In Europe, we saw, Denmark and the Scandinavian countries doing that, making that move with the support of the European Union. And when we see that kind of leadership, institutions like the EIB will be there, and also, of course, the domestic institutions. So I think that's really the number one thing, is like understanding the importance and really getting behind it. Of course, on the technological side, there has to be a lot of innovation, and there has to be the financing to support that. And when I say innovation, I mean broadly, right? So a lot of it is about bringing in solutions that have worked elsewhere. There are, of course, new solutions coming on offshore, for example, floating, but a lot of it will be stuff that's already there, but making sure that you're taking the technological lessons from elsewhere. And I know there are a lot of partners who are supporting. India is drawing on the global experience. I think it was great that there was the session on supply chains, because my colleagues tell me that was something that really at points was really a blockage also in Europe, and it took quite a lot of pushing and coordination and work behind the scenes to get through that. Of course, it's all possible to get over, but it's not easy. Just an aside from the EIB perspective, we have a strong preference for, we understand the importance of building up the domestic supply chains, and we see that as something very positive to make this more resilient. But of course, it's difficult for us to work with local content requirements. So for us, it's easier for us to engage if there's kind of incentive schemes, which we see as, a good way of working in some cases. It can really build up the domestic industry so that when you go for competitive international procurement, it's the Indian firms that are winning. And, that will be something that EIB is very, very happy about. If you're winning an international procurement, we are absolutely delighted to be having an Indian firm on board. And then the final thing I wanted to mention and I thought of it actually just as I was sitting in the audience today, is people, right? So to build up this industry, you're going to need a lot of engineers. And I know India has a lot of very talented engineers, but of course, you know, stuff is moving very fast, right? There are new trends coming in. There's going to need to be some upskilling. I know that a lot of partners are supporting that, and you have some great domestic institutions. I know Terry, you know, a little, who are working on that. And I have to say, you need women, right, as well as men. And I was just very shocked to see there's not so many on the stage today, but there are women here in the audience, which is a great thing. So I think that's something else to work on. So we see so much potential, and I really wanted to congratulate everyone here, actually, for what they've built. Thank you.
Thanks a lot for sharing your thoughts, and particularly the last point around capacity building and the gender empowerment thing. So thanks for that. Moving on, I'll now try to have, let's say, developers' perspective, and I'll go to Mr. Shyam Sharma from O2 Power. And it will be great if you can talk about different avenues for RE financing in India, and particularly for wind energy. And I mean, because you're representing developer community, it will be good to know, like, how do you see these green financing kind of things enabling the ecosystem for large scale deployment of wind energy? So over to you.
Yeah, good afternoon, everyone, and I thank MNRE for inviting me to this panel discussion. Coming to the first question, what you have asked around the financing available in India, so at this point of time, a lot of domestic lenders are available in the market to do the greenfield financing. I would say that all the PSU banks and the financial institutions like PFC, REC, IREDA, plus the private sector and BFCs are also available for doing the greenfields financing. So now there is a great need of to get this green financing availability for the refi part of it. So here comes the green bonds. So once the project is operational and have some history to it, say 1 year to 2 years, you know that what is the seasonality, how the generation is coming, whether it is P75 or P90, whatever it is. So at that point of time, typically what developers do is they make the restricted group of the various project SPVs and bring the bonds to the international market, which basically have the interest from all the foreign stakeholders who have mandates for green investing. So partners like EIB and all the multilaterals have those mandates to invest in these bonds. So typically what the green bond does is it brings down the cost of the capital for the project, as well as also it releases some part of the equity. It has a lot of less restriction as compared to a greenfield financing, and the capital availability to the IPP is more, so they can redeploy that freed up cash into the new projects. So this is from the green financing perspective on the bonds.
Thanks. So moving on to Mr. Rajiv. I mean, what we are saying is basically we have got green financing and everything, but if you can kind of highlight, there have been, I'm sure you will face some of the challenges when you talk about financing, but the good part is like we have been able to kind of overcome these challenges because of interventions from, you can say because of policy interventions kind of thing. So if you can talk about some of the best practices or interventions in terms of policies which have kind of helped accelerate this industry, that's number one. And in terms of your ask or your suggestion, what would you like to see moving forward in terms of some of the policy interventions?
Thanks very much. Given the lady and the gentleman on my right, I have to say I've got huge performance anxiety speaking about green finance. But what I do bring with due humility is a developer's perspective from the long term. We have been, my company, through a couple of changes of name, I admit, been the longest serving foreign investor in the country. We've been here since 1996. I've myself been in 27 years in the industry. And my company was the first one to actually do a project finance wind project in India back in 2006, 2007. So we have seen several seasons, if you like, of that. I think the first point I would like to make is that finance follows the project. You know, green or gray or blue, finance doesn't come out of nowhere. So finance will always follow if our basic project structuring is right. And that we have seen in conventional, and we continue to see in renewables, and no doubt we'll see that as we move from green electrons to green hydrogen and chemicals and so on. So, you know, if you look at renewable industry, and in fact before that in thermal as well, the key barrier to financing, both debt and equity, was the lack of creditworthiness of the ultimate off-taker. Now I'm very happy to announce and actually look the Joint Secretary in the eye that thanks to the efforts, the significant efforts that have been made. I think the first, going back a few years, was setting up SECI as an intermediary, which took out a lot of the risks. And the second, the LPS scheme, I think just last week I read in one of the business papers that overdue receivables have come down by 74%. So they need to be commended for that. Because ultimately, in any business, if the ultimate consumer does not have the ability to pay, then we can only structure around it for a period of time, not really have a long-term sustainable business. So for that, we're really thankful to the ministry, and we commend them, and we hope these efforts continue. That also brings me to the point which somehow wasn't raised throughout the day today, which is a lot of these efforts are also linked with ultimate, you know, the rationalization of tariffs. You know, we were people talking about grid charges not being levied. One of the states saying that we bear the burden of both setting of renewables and paying all the transmission charges. Ultimately, there will be challenges to CNI and so on, and all of those are coming really because the ultimate tariff that we charge to the consumers is still riddled with cross subsidies, and we all know the central government has been trying a lot, but it's a sector which is where both states and the center need to work together. So hopefully we'll see that. So I think with these kind of steps, getting money will not be a challenge as long as we set that up. There are challenges on execution in India. There are challenges sometimes on manufacturing that need to be resolved, but there is no reason why we cannot really scale. We are talking 10, why not 30 gigawatts a year? We do require that kind of scale if we want to make a dent. And let's also face it. You know, the problem of poisonous air to breathe for us and our children is not a 2050 issue. Those of us who live in this country, it's an issue for us today. So even if you take geopolitics out and who is going net zero in which year and who is paying whom how much or not, as the case may be, we need to do it for our own sake. So I'm quite firm in my belief, as I'm sure are most of us, that we need to do it for our own sake. So going back, you know, we heard today the initial investments in wind were brought through tax depreciation. You had a lot of retail investors. Then came the era of feed-in tariffs. And finally, competitive bidding. I think once you get to the scale, competitive bidding gives the best results. There's no doubt about it. But as I mentioned, the intervention and the policy intervention that we ask for is twofold. Certainty of demand, and again, the government has taken steps about, you know, pooling them through the states and having, if you like, a calendar on a quarterly basis. That'll help. That'll help us. That'll help the banks. That'll help the manufacturers and the developers, everyone. So that is important. And the second is, you know, ultimately the entire sector should be profitable. One company will be more profitable than someone else. Someone will mess up. Someone will do very well. And that is perfectly fine in any capitalistic system. But ultimately, the entire sector should be profitable. Only then can the whole sector flourish.
Thanks.
Sorry, I like talking. I'm from the state of Bihar. You have to just ask me to stop. Otherwise, I'll carry on.
Thanks a lot for talking about that challenge. And the last point, what you mentioned, like the whole ecosystem should be kind of somewhere everyone should get benefited out of this. So taking on from the challenge itself, I mean, you were talking about the challenge. I'll go to Mr. Mukundan. And something about the role of government. So what kind of policy measures can government bring in to not only increase the domestic capital, but also to increase the inflow of international capital?
Well, the government has been taking certain interventions at various points of time for making available a lower cost of capital for the renewable energy projects. One of the things which the government can do, and there have been a couple of things they can do actually. One of the things which they can do is to introduce some kind of a blended capital. Blended capital means that there are two sponsors or one sponsor, say Government of India plus a foreign government, which are focused on green. They contribute into a fund, probably $1 billion each or something, which attracts other commercial investors to put in $3, $5, $6, $7 billion. And the government takes probably a higher risk and probably a lower return itself. Probably if the market is going at 8, 9% interest rate, the governments take a lower return, say 4% or 5%. But what they have done in that process is they have de-risked the entire fund itself and enabled that commercial investors to take a slightly higher return. And on a blended basis, it becomes lower cost of capital for the underlying projects. Something on these lines has been outlined in the last year's budget, union budget, where they have said the government will introduce some kind of a blended finance, but we have not seen those kind of products come into the market as it. But I'm hoping that in the next 1 or 2 years, some blended finance products would get introduced in the market, and that would really help the industry in lowering the cost of capital. This is number one. The other policy initiative which they can do, I go back to my first comment, and which I'm very passionate about, is about higher domestic capital coming into the industry. If you see global institutions, be it multilaterals, pension funds, or provident funds, they all have a mandate that green would constitute 5%, 10%, and there is a trajectory as to what portion of their portfolio would be on green investments. Probably those kind of targets for our banks, our insurance companies, and our pension funds would also force them to orient their investments towards green projects, which will and therefore the more capital would be made available. So a couple of policy interventions can be done by the government for lowering the.
Thanks. And I think you mentioned this concept of blending finance. Somewhere the thought process is if we can get closer to the low-cost financing that has been kind of the ask of the system. So I was thinking like, I will go to Nina, and if you can provide some inputs on how can we have access to low-cost financing from international investment community. So that's my first question. And second thought process was somewhere the inflow of international investment, I mean, it is happening, but it is happening at a slow pace. And some of the thought process is like it may be insufficient to kind of meet our overall targets. So this is happening because of some of the perceived risks. So what are the measures you would like to kind of advise because of which we can increase this inflow of international capital based on your past experience or based on your experience in other countries of the globe?
Okay, again, a lot of questions, so thank you very much for that. So firstly, I want to be a bit humble, right? We as EIB and even the whole international community, we are not the most important player, and we're never going to meet all those needs because I think, as Mr. Mukunand already said, domestic investors are super, super important. So, I think we as multilaterals and international investors, we have to also know our place, right? And we have to understand ourselves, and the counterparts here have to understand what is our advantage. And for us at EIB, it's usually that we can provide like longer term funds, right? At the shorter term, we can't compete on price, and we're not going to be able to. But on the longer term, yes, we can come. The second point is, India is already accessing a lot of international finance, and including low cost, right? So, we heard already, India has already issued green bonds, both, I think, the government and private players. So, you already need to know how to do that. There could be some, need to bring that out to maybe smaller players, right? Because I think there's actually like a lot of technical input that goes into that, right? I know a little bit at EIB, we worked on this EU taxonomy, on all the sort of like monitoring tools that stand behind these green bonds, and that all has to be in place and that all has to work. It's not so easy for every player to do that. So I think that's something that can help. I think my colleague here already mentioned, I think, carbon markets and carbon finance, and obviously that's going to open up a lot of new options. I'm not the expert on what's happening in India on this, but my understanding is that potentially it will be introduced relatively soon on a voluntary basis. And I think even a voluntary basis, it's a really good start, because you start putting into place a structure, and I think there are players who are willing to pay for that. And that's something that can really be built on over time. Then, of course, Mr. Mukund also covered this point on, the government role, right? And blended finance is one way of going about it. It's something that we work with a lot, particularly in Africa, but also inside the EU, particularly when we're looking at an industry that's, very new, something that's very innovative, where the government or we want to get behind it, we really believe in it, but we think there's a perceived risk that needs to come down. And that can be a very effective way of going about things. On the other hand, the government is already doing a lot to get behind particular projects by providing a guarantee, right? Let's not forget that is there already. We often work with a sovereign guarantee to back renewable energy. So I think that will continue, and potentially, over time, if the price of that were to come down, or, if there are others who want to really back this, then that's something that can work. And then, of course, Mr. Mishra, I think, covered much better than I can some of the sort of off-take risk, and, I think a lot has been done. And again, what investors want is not so much a specific price, but the certainty. They need the certainty to be there. And, for offshore, I think that's probably what a lot of people are waiting for. I mentioned also technological risk is obviously there if you're talking about something newer. And, we mentioned some of the ways of looking at that. Yeah, and then, of course, once all of those factors are dealt with, so sort of the real risk is brought down as much as possible, you have to start with this perceived risk, which I think really goes back to this aspect of vision, of really backing it.
Can I, with your permission, add
Please,
just
please.
one, which is a more generic point. If you look all over the world, and I've had the good fortune of working in a few other countries as well, infrastructure is best financed by bonds. That is the natural source of capital for a product where your revenues are fixed for a long period of time. Now, our bond markets have lacked depth, both in terms of tenors as well as the kind of credit. And we all know, these are issues more for the Ministry of Finance. We've had relatively high fiscal deficits, government borrowings, and AAA and PSU borrowings crowd out virtually all other bond issuances in the past. And it's not rocket science. Everyone knows what needs to be done but more we can do to deepen and broaden our bond markets, the better it will be for our industry.
Thanks. And because we are talking about green bonds, Mr. Sharma, you started with green bond thing, and then later other panel members also talked about green bonds. So how do you see this role of green bond, particularly in the context of new technologies like offshore wind? How do you see these things enabling the ecosystem? What is your thought process around that?
So I think Rajiv has already summarized that for any infrastructure project, bonds is the ultimate solution because it matches the asset liability. So green bond can be helpful in the technology which are already settled or already commercially viable. For all this offshore wind, green hydrogen and all other new technology, it will take some time because we don't know as of now how the policy will come up, how the generation will come up, how all this infrastructure related issues will be there. So I think offshore wind is a little bit far off as of now, but all these existing technologies, all hybrid, plain vanilla solar or wind, surely they are already there in the green bond market, and they are all the IPPs are bigger sized IPPs are raising bonds, green bond for last 5-6 years. So that is already settled. all new technology will take some time till the time or the investors are comfortable around it. So in my view, it's little bit far off.
Right, right. Particularly for offshore wind. So, Mr. Mukundan, any thought process around green bond for some of the new technologies?
Well, India announced green bonds, and the first sovereign green bonds were issued sometime last financial year. We attempted it with a raising of about 5,000 crores, which was to be used basically by the government of India for green projects of other PSUs. And if you see, many would have been slightly disappointed at the issuance of this green bond, basically because it was issued not the discount to the market price of a comparable market bond was not available for the green bond. Because it's a green bond, what the expectation of the market was, investors would take a hit and probably they would be able to subscribe to these bonds at say 50 basis points or 100 basis points, 1% lower than what it is. But when compared to the normal government bond, this was issued at just 5 basis points lower, 0.05% lower than what is a comparable government bond for the same tenor. And even after issuance, now the traded price is also around, not tracked off late, but I guess it would be, about a month back it was at the same levels, at the 5 basis points differential. So that opens up the question whether green bonds are dud, and there is no difference between a green bond and a normal bond issuance from a government of India perspective or for any other borrower. And investors are looking only at the returns which they make and not necessarily at the green component. And India is not able to attract the greenium, if you want to call it. So my answers is two in this. I don't think so. Firstly, this was just a sample of 5,000 crores which was issued by the government. And that should not discourage neither the government nor any of the corporates from issuance of more green bonds. Because essentially, green bonds, it will open up new set of investors who will want to invest into India itself. Traditionally, we have been going to the multilaterals, we have been going to a certain group of investors and raising some capital, but there are large pools of capital which are dedicated for green. And with this avenue, they will, so we are simply opening up a new pool of capital to come into the markets. And we should not be losing sight of it if we are having this target of achieving 35-40 gigawatts of capital addition every year. Therefore, there should be more issuance of green bonds. And once, this was only a sample, and as more and more green bonds are issued, I'm sure the international markets will recognize, and the due discount to the other normal bonds will get recognized, and it will get priced in the entire market. So I'm not disappointed. I am disappointed, but I'm not losing hope that in the future we will not be able to get a lower cost of funding.
Thanks. So, Mr. Rajiv, you would like to add anything on the green bonds before I open the floor for questions?
Sorry, I seem to have a view on everything, which I'm feeling very embarrassed about. No, I think the premium of 5 basis points for the, I think, 5-year issuance and 6 basis points for the 10-year issuance was disappointing and underwhelming. But let's also understand that was the first ever sovereign issuance by the government of India. It needs to carry on, and I have no doubt that they call it greenium, I think, the green premium or green discount should increase over a period of time. So I think we should be in the market. We should do it, and as I said, try and broaden and widen the depth and width of the market so that more and more issuers come in.
Thanks. So I'll come to all of you, probably a kind of rapid fire kind of questions. But before that, I'll open the floor for discussion. So if there are questions from audience, you can briefly introduce yourself and then you can have your question. And it would be good if you can also basically ask the panel member whom we would like to ask that question. So, yeah, that's the advantage of last session, yeah.
Hello, good afternoon. My name is Farooq Amer. I am from NL Green Power. I look after regulatory affairs. We have a couple of projects that we did in India, and they're financed by international lenders. Okay. My question is, the money is available. Why is it so hard to access it? why is it so hard to access that money? Like to meet the excess, because the money is there, but to get your hand on that money, you have to undertake a lot of activities, which add to a lot of cost. And in a competitive market like India, that becomes a big disadvantage. So how do we fix that?
And your question is for whom?
To I think, sorry,
Mr. Mukundan, you would like
the EIB. Yeah. Anyone can take it up, please.
Yes. Okay. So, you know, I think my colleagues work with NL, so I think you know us quite well. Look, you know, we have to be honest. We're not the easiest lender to work with, right? I think all of the multilaterals, we all have, because we have various shareholders and they have very serious objectives, particularly around environmental, around social, around also the financial. And we have to provide assurances to them, right, that those guidelines will be followed. So we do have quite heavy guidelines. That's why, you know, I think often for smaller projects, we are not the best placed, right? I think we are trying. We understand your pain, I have to say, and we are really trying to get better. We're trying to work better together. So, you know, recently the European Union, the Commission has been very serious about Team Europe and about trying to align at least amongst ourselves, right? And we have, I think, mutual reliance agreements with other IFIs and with Team Europe partners. So we try to make it a little bit easier. At least we're not duplicating those processes. What we also do, we work a lot with partners, right? So, you know, here in India, we haven't, I don't think, financed directly any renewable energy. We have worked with agencies like IREDA, like IIFCL, who are able to kind of assure compliance with these rather hefty procedures and hopefully make it a little bit easier to get that money out there. So, you know, we do our best. I have to say, you know, the reason that we have these hefty procedures is that we want to make sure that we have quality projects, right? And we do believe that, you know, making sure that things work on the technical front, on the environmental front, on the social front, ultimately will lead to good quality projects. And we see in other places, other lenders where perhaps finance is easier to access, we see projects going wrong. Having said that, we understand that on our side too, we have to try to be, you know, a better lender for our clients. So thank you for raising this.
Thank you.
You'd like to add? You said? Okay. So next, can we have the mic? You wanted to?
Yeah, my name is Jami Hussain. Just a general sort of question, because I think we talked about the risks, and you know, there are different kinds of risks. All kinds of risks are possible. But I wanted to talk about two kinds of risks. One is the contractual risk, and typically developers or IPPs, they will enter into contracts and then come to you probably for financing, or maybe you have a say on that, on the terms and conditions in a contract. And the second is the resource risk. So on the side of, for example, in case of wind, you have wind resource assessment, and we have seen over you know, last few years that many people have complained that they are not even getting P90 numbers which they were assessed earlier, and whether there is a problem in the methodology of the resource, whether it was correctly done, and what kind of say as a financier or as a, you know, lender or things like that you have on these matters.
And your question is open to both. Yeah, thank you.
First one is on the contractual risks. I'm assuming that you're talking about the contractual risk of the developer with the sale of power, I mean, with the PPA holder, or is it the contractual risk between the lender and the developer?
They are both, even the PPA as well as on the EPC side.
On the EPC side?
As well.
Yeah.
But the contracts can have problems anywhere.
So these are, that's a challenge which we face as financiers in many of the projects, especially in countries like India, where PPAs have been renegated. We ourselves have invested into equities of certain projects. SECI awarded projects where we have gone into certain problems at certain points. And we know the Indian legal system, the enforcement of the contracts and all become that much more challenging. Having said that, the contracts between on the PPA side of the contracts and after the incorporation of SECI and also expanding the role of SECI from pure to as an intermediary, this has been significantly de-risked now. And if you see the tariffs at which the PPAs are going, the SECI tariffs are at much lower level. PPAs of certain state utilities like Gujarat and all at lower level. There are perceptions, and now developers have also understood that these states are more riskier and therefore it gets priced in the entire tariff which you are putting. And this is an expertise which the developer, which we as lenders or financiers, if you want to call it, we also gain it over years of experience that these are kind of more reliable, stable kind of contracts. And I would say today, as far as the PPAs are concerned, the standard bidding documents and standard concession agreements have come. So that risk has been significantly mitigated. Insofar as the renewables, insofar as the EPC contracts are concerned, and thankfully, both on solar, wind, what we have been seeing is that these are small period implementation contracts. These are 18 months, 24 months kind of EPC contracts. And therefore, we have not seen significant risks or renegation of litigations on the contract side, on the EPC side as well. Those have happened in many of the bridge roads and all that, which have a longer implementation period of 4 years or 5 years. Civil constructions are very high. And these EPC contract disputes occur basically because of the inflation, and then the price goes up. And who bears this additional cost is the issue at which you get stuck. You would have awarded the contract on a fixed price, fixed time delivery. And when for long gestation periods, these tend to get affected. But thankfully, in renewable energy or more so in wind or solar, we have not seen these kind of issues. Number one. Second one, what was your question?
Yeah, the second was about the resource risk, because we have seen that.
So that's a challenge. I mean, I don't know whether it is we have been also experiencing in many of our projects where the actual delivery of power has been on solar projects, especially has been 1%, 1.5% lower, and we are also seeing that in the wind projects as well. It could be because of climate change. The wind patterns are changing today, and the micrositing which you have done many years back are no more valid. Wind patterns are changing. We are seeing that as well. We are also seeing, might be the solar assessment was wrong. We do not know. We are not great technical experts, but we have been seeing that two ways in which we are mitigating it. We become more conservative in the financing at the point of financing. But one significant development which has happened is, I don't know how many of you know, there are insurance products available today in India for mitigating this risk. If you have underwritten a debt at say P90 with a solar of 21, 22% or whatever percentage of PLF, and if there is up to some level of lower production, there's an insurance product available, and some of our projects have already taken that insurance product. It's available from HDFC. I don't know if other insurance companies are also giving. So those kind of sophisticated products are also coming into India. So that's how we are, but it's real. The lower productivity, lower generation of electricity is real in our projects.
Thanks. Over to you.
Hi, I have a question around non-price criteria in auctions. Globally, this is becoming quite popular now. So, any of you, do you have a view on how those non-price criteria could be considered in the Indian context?
What is that? Non-price factors for award of bids. So in India, the regulators would be the best to answer this question about non-price bids. But in Indian context, just on QCBS or something, it becomes a bit more challenging for award of contracts, if that is the question which you are asking. Especially in large contracts, in an emerging market, in a democratic country, it becomes a bit more challenging. Those in certain new emerging areas, there could be a combination of technical factors, qualifications, plus some kind of financial factors, and a mix of it is possible. But the preferred mode, in order to avoid litigation, both from a developer perspective, financial perspective, everybody seems to be more comfortable in our kind of, especially you see now in a country like us where the different courts take different interpretations, and we are talking of contracts of 25 years, 35 years. It's having it as a more accessible, easier number, a price as a number, is what gives comfort to many of the regulators.
Thanks. Any other question? No, so that way we are also getting close to our time. So what we will do is basically the last round of this question. So my request to you would be if you can provide pointed 2 or 3 point response to what can we do to enable green financing for RE projects in India and particularly for wind energy. So your pointed response, 2 or 3 point response, that's it. Who would like to go first?
So I think we have already, Mr. Mukundan has already summarized those things, or Rajiv also has mentioned those. First is bringing all this pension fund money into RE sector. Part of that to remove the asset liability mismatches of the banks and financial institutions, deepening the bond market in India, and I think having those credit enhancement instruments which will improve the credit rating of the companies to have the funding at a lower rate. I think these are the 3 major points from my side.
Thanks. Rajiv.
I would just carry on in the same vein. Focus on reducing risks, and the money will follow, both equity and debt. So we talked about the payment risk. Work has been done. That should carry on. I think someone talked, and I think is a relevant point, to my colleagues who are OEMs. You know, the output risk in India has been, my group has invested in other countries. The wind output risk in India has been far more than East Asian countries. I don't know what the reason is, and I'm talking about 15 years, it's not 1 year. So we need to continue to improve. I'm not a data scientist, but continue to improve so that we have greater certainty about that. And finally, the reforms of the legal sector. You know, we are a democracy. We always have justice done, but it is often delayed. And the time value of money is all important. So taking steps whereby investments don't get mired in the judicial process and have to wait in years and years, those are the kind of reforms I would say. So focus on getting risks down, both on the projects and the financing and the judicial interpretations, and money will follow.
So from my side, I wanted to start by saying I think the greenium, it has to come. And why it has to come? Firstly, because people are willing to pay for green. So, you know, a lot of our shareholders, you know, they are willing to put money behind it. But secondly, because I think increasingly people will be less willing to put money behind other projects. So for EIB, you know, we have a particular policy role. So, you know, we are one of the first to be fully Paris aligned. So we will not put money anymore behind oil and gas. But I think other investors are going to follow that path eventually. So the greenium will be there. Speaking as an investor, we have resources. We would like to put more into India. What would, you know, just very practically help us to do that? The first is, of course, the projects. And this was mentioned, you know, if the projects aren't there, the money won't come. And if the projects are there and are well structured, ultimately, the money will flow. So that's the first thing. And secondly, you know, what we need are good partners, right? So, you know, it was already mentioned that we're not the easiest partner to work with. We're trying to get better, but, you know, we will always have our own slightly idiosyncratic requirements. And what allows us to work effectively is having partners who understand that, who know how to work together with us most effectively. And, you know, thanks to that, we have been able to make progress here. And I think that will continue in the future with new players, including NIF, NABFID, for instance, coming in. So I think there's a lot of prospects.
So I just second what Rajiv said. Well-structured project is something which is absolutely essential in India. If you are able to structure your project well, have your PPAs in place and everything well covered, I think money will automatically follow and should not be a problem, whether it is domestic capital or international capital. Having said that, and to answer some of the questions about how the projects are awarded, and what the government is also thinking at this point of time is that, and we are talking of 25-year, 35-year kind of contracts, and the economics, the entire scenario changes after 15 years or 20 years. And there is a need for reopening of the original contracts which were, original PPAs which were awarded by the government itself. And generally in the government system, there is a lot of resistance, there is a lot of fear when we have to reopen those contracts. I think there is a thought process in the government also that PPP contracts which have been awarded, infrastructure projects which have been awarded, and because of extraneous reasons, if these projects become unviable, there will be a framework for renegotiation of contracts. That's something which the Ministry of Finance has been working for some time now. We hope that those guidelines come up in the next couple of weeks or months, I guess so. And that will give a lot of comfort to lenders and to developers for putting more money into the sector.
Thanks. So this last round makes my job easier. So the key takeaways from this session is precisely we are talking about if we want to kind of enable green financing in India, and particularly for wind sector projects. So some interventions related to pension fund, provident fund kind of thing, deepening the bond market for sure, although we had some thought process around like for some of the new technologies like offshore wind. This may not be a kind of good start because it's a new technology, but deepening the bond market certainly is going to be very helpful. And then interventions related to some sort of credit guarantee mechanisms. That's very helpful. That was the third thing. And then most important aspect around reducing the risks, because that's a big thing we need to kind of work around that. Then legal sector reforms is the other point you mentioned. And then Nina mentioned about the good partner thing. And most importantly, the last point was around the structuring of the project. So a well-structured project, certainly we are going to have avenues for green financing. So that's the key takeaways from this session. And I would like to thank my panel members for sharing their experience, their insights, their inputs. And that's, so we are on time. So with this, I would like to close this session. Thank you.
Thank you to our panelists for clearing quite a mist around green finance. Thank you. And would like to request our moderator, Mr. Amit, to kindly present the mementos to our panelists. Thank you, Mr. Mukundan. Thank you to Ms. Nina Fentone. Thank you, ma'am. Appreciation. Thank you to Mr. Rajiv Mishra. And thanking Mr. Shyam Sharma. And to express our thanks to our moderator, I would like to request our Joint Secretary, Sir, Shri Jagdale, to please present the memento thanking moderator. That can be all four of you. All four. We'll close with a group photograph and then